You probably think debt looks obvious. A maxed-out credit card. A bank calling nonstop. A missed payment. A red warning number on a screen. Something dramatic. Something visible. But the most dangerous debt usually doesn't feel like debt at all. That's why it works. Imagine waking up tomorrow with no loans. No credit card balance. No car payment. No mortgage. Technically debt-free. Sounds safe. Until you realize something uncomfortable. You still owe. Not to a bank. To your lifestyle. Because every month, before you even think, money is already gone. Rent. Subscriptions. Phone bill. Insurance. Food delivery. Streaming platforms. Transportation. Tiny recurring payments you barely notice anymore. You haven't borrowed money from a lender. You've borrowed it from your future self. And every month, your future self sends the payment. This is the invisible debt trap, the kind that doesn't destroy you suddenly. It drains you slowly, quietly, professionally. And modern life is almost perfectly designed to pull people into it. A few decades ago, debt felt heavier. You sat across from someone at a bank. You signed papers. There was friction. Embarrassment sometimes. A sense that borrowing money was serious. Now, debt arrives disguised as convenience. One click. One tap. One monthly payment. And that word, monthly, changes everything. Because humans are terrible at understanding long-term accumulation. We focus on immediate pain, not total cost. Which is why only $19 a month feels harmless. Even when 10 different, harmless, payments quietly combine into financial suffocation. Think about the psychology for a second. If someone offered to take $15,000 from you immediately, you'd hesitate. You'd analyze it carefully. But spread that same cost across years? Now it feels manageable. Invisible. Emotionally distant. This is why modern pricing rarely focuses on totals anymore. It focuses on fragments. Monthly. Weekly. Daily. Per use. Per meal. Per ride. Everything is broken into pieces small enough to bypass resistance. And once resistance disappears, consumption accelerates. Look around. Phones. Cars. Furniture. Education. Software. Even groceries in some places. Everything is becoming subscription-based or installment-based. You no longer buy products. You rent access. At first, it feels empowering. You get things immediately. No waiting. No saving for years. No large upfront cost. Just smooth, painless convenience. But there's a hidden trade happening underneath. You're exchanging future freedom for present comfort. And the strange part is, most people don't feel trapped when they enter the system. They feel upgraded. A nicer apartment. A newer phone. A better car. A few premium services. Nothing extreme. Nothing irresponsible. Just small improvements. Small upgrades. Small comforts. Until one day, your income stops feeling like income. It feels like maintenance. You're no longer earning money to build wealth. You're earning money to sustain obligations. That's a completely different psychological reality. This is where invisible debt becomes dangerous. Because traditional debt has a finish line. Eventually you pay it off. But lifestyle debt? It expands. You earn more. So expenses grow. Then responsibilities grow. Then expectations grow. And suddenly, the raise that was supposed to create freedom quietly creates dependence instead. There's a reason this feels normal now. Entire economic systems rely on continuous consumption. Not occasional consumption. Continuous. Predictable. Automatic. A customer who buys once is useful. A customer who pays forever is priceless. That's why businesses increasingly optimize for recurring revenue instead of ownership. Subscriptions are predictable. Installments are predictable. Autopay is predictable. And predictability is extremely profitable. Which means the system quietly rewards your inability to stop paying. Think about streaming platforms for a moment. Most people don't actively decide to renew them every month. They simply fail to cancel. That difference matters. Because modern business models increasingly rely not on conscious purchasing, but unconscious continuation. The same thing happens with lifestyles. People rarely sit down and consciously decide, I want to permanently increase my monthly survival cost. It just happens gradually. One upgrade at a time. And upgrades are emotionally addictive. Because each one creates temporary relief. Temporary status. Temporary comfort. But the brain adapts quickly. What once felt luxurious starts feeling normal. Necessary, even. Then removing it feels like loss, even if you were perfectly fine without it before. This is one of the strangest financial illusions in modern life. People think they own more than previous generations. But in many cases, they simply owe more elegantly. A luxury car becomes a monthly obligation. A premium apartment becomes recurring pressure. A financed lifestyle becomes permanent financial tension disguised as success. And social media intensifies this dramatically. Because now people don't merely consume products. They consume comparison. Constantly. You open your phone. Someone is traveling. Someone bought a house. Someone upgraded their life, someone appears financially ahead. And your brain interprets that information emotionally, not rationally. Which creates subtle pressure. Pressure to keep up. Pressure to signal success. Pressure to look financially stable even when you're financially exhausted. And this creates a dangerous cycle. People spend money they haven't fully earned yet, to maintain appearances for people who aren't paying attention as much as they think. That sounds absurd. But entire industries depend on that absurdity continuing. Fashion. Luxury branding. High-end technology. Status products. Much of modern consumption isn't about utility anymore. It's about identity projection. And identity is expensive to maintain. Especially when it's financed. This is where the invisible debt trap becomes psychological. Because eventually, your expenses stop being numbers. They become emotional commitments. You're not just paying for a car. You're paying for the version of yourself attached to it. You're not just paying for an apartment. You're paying for status, comfort, validation, identity, which makes downsizing emotionally painful. Not because survival becomes impossible. Because ego becomes uncomfortable. That's why many people would rather stay financially stressed than appear to move backward socially. Now here's where the trap becomes even harder to see. Invisible debt doesn't always involve interest rates. Sometimes it involves time. Imagine someone earning a high salary. From the outside, they look successful. But behind the scenes? Their entire life is calibrated around maintaining enormous monthly obligations. So they can't leave the job, can't slow down, can't take risks, can't experiment, can't rest for long. Because the machine requires constant feeding. That's debt too. Not financial debt necessarily. Lifestyle captivity. And strangely, high income can sometimes deepen the trap instead of solving it. Because as income rises, expectations rise alongside it, people upgrade faster than they stabilize. A bigger paycheck often creates bigger fixed costs before it creates security. Which means people become wealthier on paper, while becoming less flexible in reality. Flexibility matters more than most people realize. Because freedom is not just about how much money you make. It's about how long you can survive without making it. And invisible debt destroys that buffer quietly. Month by month. Payment by payment. This is why economic shocks hit modern households so hard. A layoff. A recession. A medical issue. A market downturn. Suddenly the system breaks. Not because people were reckless necessarily. Because their lives required uninterrupted income at all times. There was no margin. No space. No breathing room. And modern economies quietly normalize this condition. Living near the edge becomes standard. Stress becomes standard. Constant low-level financial anxiety becomes standard. People joke about being broke while ordering luxury coffee through delivery apps on financed phones. Which sounds ridiculous. Until you realize how psychologically normalized this has become. Consumption no longer feels like spending. It feels like emotional maintenance. And that changes behavior dramatically. Because people defend emotional necessities far more aggressively than logical expenses. This is also why budgeting advice often fails. Because spreadsheets cannot compete with emotional reinforcement. A budget is logical. But convenience is emotional. Status is emotional. Comfort is emotional. Social belonging is emotional. And humans rarely defeat emotional systems using logic alone. Now zoom out further. Because this isn't only happening to individuals. Entire countries operate this way too. Governments borrow heavily. Corporations borrow heavily. Consumers borrow heavily. Modern economies increasingly depend on future income being pulled into the present. Growth now. Payment later. And as long as growth continues, the system appears stable. But there's an uncomfortable fragility underneath it. Because future income eventually arrives. And when too much of it is already committed, flexibility disappears. This is why debt-driven systems often feel prosperous right before they become unstable. Everything looks upgraded, expanded, accelerated, until suddenly, the pressure becomes visible all at once. You can see this pattern throughout history. Asset bubbles, housing crises, consumer debt explosions, periods where easy money creates artificial comfort before reality catches up. And reality always catches up eventually. But the most fascinating part of the invisible debt trap is this. People often don't notice the trap while income is flowing. They notice it when freedom disappears. The moment they realize they cannot pause, cannot step away, cannot say no, cannot absorb disruption. That's when the illusion cracks, because true wealth isn't measured only by possessions. It's measured by optionality. The ability to choose. The ability to wait. The ability to walk away. Invisible debt quietly removes those abilities first, long before it removes appearances. Which creates a strange modern paradox. Many people look financially successful, while privately feeling trapped. And the trap rarely arrives dramatically. It arrives through tiny agreements, tiny conveniences, tiny recurring commitments, repeated for years. A subscription here, an upgrade there, a monthly payment, a financing plan, a lifestyle adjustment. Each decision feels small, reasonable, manageable. But eventually, the accumulation becomes structural. And once your life structure depends on constant income, constant consumption, and constant financial momentum, you become extremely vulnerable to interruption. That vulnerability changes behavior. People tolerate jobs they hate, stay exhausted longer, delay risks, suppress creativity, avoid uncertainty. Not because they lack ambition, because survival costs too much now. And maybe that's the deepest cost of invisible debt, not the money. The psychological compression. The narrowing of choices. Because when every month already has a destination for your income before you even earn it, the future starts feeling pre-owned. So here's the uncomfortable question. If most modern debt no longer feels painful, if it increasingly arrives disguised as convenience, identity, and comfort, and if entire systems profit from keeping people locked into recurring obligations, then how many of your financial decisions are actually choices? And how many are simply maintenance payments for a life you slowly got trained to believe you needed?